Market news now. Asian stocks and U.S. equity futures stabilized after Wall Street sagged amidst robust U.S. economic data that stoked concerns about a pullback in central bank stimulus. Shares paired losses in Japan and turned higher in China and Hong Kong. Over on the European side, European stocks fluctuated along with U.S. futures as traders awaited key jobs data for clues on how much longer stimulus may be needed to support the American economic recovery. The dollar did strengthen. However, locally, ABSA held its AGM this morning with Chairperson Wendy Lucas-Bull announcing that she will retire in March 2022. She'd been at the helm for 9 years. But to get into actual detail of the market performance, we are joined by Warwick Lucas from Galileo Capital. Warwick, thank you so much for your time.
My pleasure.
Let's talk about the week in review. How would you characterize the trading week that was?
Generally, quite a cheerful week in terms of economic news. The week saw some good signs of international economic recovery. We've seen US ADP employment data yesterday and services offtake data looking pretty good. US manufacturing data is good. EU manufacturing activity hitting record highs. And then South Africa saw robust trade data, which is obviously fairly positive for the currency.
Let's talk about the performance of the oil price. I mean, what's driving that?
Okay, so we've got some factors on the supply and demand side. On the supply side, what we're seeing is that the OPEC plus several others discipline is generally holding, and they are sitting pretty much on the supply that they're putting out into the market, and that's allowing prices to rise. And then you're also seeing a little bit of pressure on oil companies generally on from the ESG investors, putting legal pressure on them to become a bit cleaner. And then on the demand side, well, we're seeing that first of all, US gasoline inventory are pretty low, and as higher mobility is coming through with these economic recoveries, so that's seeing some demand coming through for oil and gasoline as well.
When you look at the resurgence in commodity prices, I mean, do you think we're in a super cycle?
Well, I mean, it's certainly positive from the point of view that governments will use approaches such as infrastructure build and so on to stimulate growth to recover from the whole COVID crisis. Now, of course, there's going to be a tech element to that as well, which may mean the stimulus is perhaps less commodity intensive than we used to in past infrastructure cycles and commodity drives. But it's still constructive. I think we just need to think in terms of big emerging economies like India and Vietnam and Indonesia rather than the likes of China.
So in my intro, I mentioned the U.S. jobs data. Do you think that the figure that we have later on, we are expecting, do you think that might shift the debate on, taper talk?
Okay, so, I mean, we can expect a good number that the ADP is a private sector payroll and not as broad as the government's non-farm payroll, but it's certainly pointing upwards. I think what we need to remember is that the focus of the Fed is both jobs and growth, and that's part of their mandate. It's a dual mandate. So while the issue of jobs is certainly getting quite well met, I mean, growth matters as much as part of their mandate as well. So any tightening steps by the Fed are going to be very, very tentative. They're not going to hike in any kind of a hurry. There'll be lots and lots of signaling noises before they actually do that.
What do you make of this retail, driven meme stock mania that's, taking hold of U.S. markets at this point? I mean, I've been reading a few articles over the past few weeks, but what do you think of it?
Well, I think the right word that got chucked in there is certainly mania. I mean, that describes it pretty well. I mean, it's certainly a sign that markets have got a lot of inexperienced traders in there, perhaps some easy money getting made, and that's never a good thing. I mean, people don't turn down easy money until it turns on them. And what we're also seeing, I guess, is that you get seasoned players that go onto these kind of internet platforms and try and herd beginners in large crowds, and that's perhaps a little bit concerning. in that there's not a lot of thinking going on here. So I guess, though, it's also a sign of a risk on. Hopefully it doesn't end badly, but, well, we'll see. I don't know how much it'll actually affect the indices, but it's kind of a thermometer of markets a little bit, and clearly they're a little bit hot in places.
Yeah. Over the past few days, I've been asking a lot of the market watchers some of the key themes that are driving markets, lingering themes from May into June. But I'm curious for you, given what you do for a living, what's the one thing that is making you optimistic about the world that we're in right now, especially working with the data that you see every day?
Okay, so I think the main thing is that economies are going better, and it's very rare for stock markets to really fall down hard while economies are recovering. And certainly they have to maintain a recovery momentum, both governments and central banks, to get lives and livelihoods past this whole COVID disaster. So I think from that point of view, I mean, I'm certainly inclined to be less sort of pointed towards defensive type situations such as gold and treasury inflation protected securities, and more towards sort of positive growth. And that means the likes of value stocks, miners, other cyclicals which have got really bombed out values or share price values relative to what they've actually got on their balance sheet. So I think a positive footing will work for the time being.
All right, Warwick, let's leave it there. Thank you so much for your time. That is Warwick Lucas from Galileo Capital. Up next, we have Your Money and SME on